Hello guys, so today I'm going to be showing you how you can analyze the market like a pro. In other words, how you can break down the market so that you can make maximum profit from it. And what are the simple steps that I take in doing this? So without wasting much time, let's look at these steps. Now, first thing first, I go to the higher time frame. I start my analysis from the higher time frame. The reason for this is that it helps you to get a general overview of the market. And also, what do I do on this higher time frame? I'm currently on the monthly time frame, and for this example, I'm using GBP USD. So on this monthly time frame, I draw what I refer to as what key zones. So what are key zones? Key zones are simply areas of strong rejections in the market where price has been rejected in the past in the market. And what this helps us to do is that it helps us to look out for price reaction when price gets to these zones. And then it also helps us to know where we believe price would be heading to. In other words, if price leaves one particular strong rejection zone, especially on the higher time frame, then we expect that it will be heading towards the next rejection zone. So I'm not going to be drawing all those zones. I'm just going to draw the ones that I believe will be relevant to this analysis. So we have our rejection zones, which are also referred to as what? Key zones mapped out. Then the next thing I get to do on this monthly time frame, and just to quickly put it out there, if you do not know how to draw those key zones, I have a video on the channel where I explained this in detail, so you can always check it out. So the next thing after drawing these key zones or these most relevant key zones will be to look at the general direction of the market or to get our directional bias. Now, looking at the chart before us, we can see that it seems that this has been moving in a downward trajectory for a very long time. In other words, price gave us a lower low. It played a bit here, but still gave us what? A lower high, came down to give us lower low. It ranged a while here, but still ended up with just a lower high and then gave us a lower low. And we can see that price is moving back into this range where it created a lower high before. So what do we do? How do we now get what price is currently doing or where price is currently headed? Now, remember I told us about the key zones. If I'm to zoom in, we can see that price was rejected severally from this key zone. So that means if price is leaving this key zone, it should be heading towards another. So if I to still zoom in much more for us to see, we can see that the most recent trend of the market is upward. So price left this key zone and we believe it's heading towards this. And how is it trying to do this? By making a series of higher highs and higher lows. So in other words, price gave us a high, a higher low, a higher high, higher low, and then we have a higher high. Price made a retracement here and seemed to be heading upwards. However, there's something that GBP USD did some around this year that confused a lot of people. If I'm to include a trend line here, the analysis would seem really, really straightforward. In other words, GBP gave us a first touch of this trend line on the monthly time frame, a second touch, and for a lot of traders who were expecting a third touch of this trend line for price to then keep heading upwards. However, something awkward happened. Now, what was that? If we go to the line graph, we see that GBP while trying to head downwards, simply made a double bottom and started heading back upwards. So what am I saying? There's a perfect scenario for analysis would have been a third touch of this trend line, or if I'm to include the Fibonacci retracement too, and I place this here, we can see that there is a point I always refer to as what? The Fib2 golden zone, which is the zone between the 0.5 and 0.618 mark. Let me change the color of this. Now, it would have been best if GBP/USD had just come in here, and then I would have been very confident in pumping in my buys. However, because of this immediate change in direction by reason of this double bottom that was formed here, we can still say that yes, GBP/USD is heading upwards, even if personally I do not feel I have the perfect scenario. However, on the monthly time frame, we've been able to achieve the two major things in which we try to do. That's first establishing our key zones and then getting our directional bias, which in this case is upwards, is bullish. So the next thing would be to go to the weekly time frame. Now on the weekly time frame, I try to do two things also. First would be to see if the immediate direction or trend of the market aligns with what I saw on the monthly time frame. And secondly would be to try to get a candlestick chart pattern that I can work with. So merely looking at the chart, we can see that we have the market trending upwards. But again, if we look closer, we can see that the most immediate trend of the market, which is this part of the market, is bearish. Now, how do I mean? You can see that the market was trending upwards, giving us higher highs and higher lows. All of a sudden, the market gave us a higher low, but ended up giving us a lower high. So if I'm to take this two, it didn't just give us a lower high, it broke the initial higher low that was given. So the market gave us a low, a lower high, a lower low, and the market is currently pulling upwards. Will it continue upwards by taking out the lower high that it created? Then only time will tell. Like I said, from the monthly time frame, especially for those of us who swing trade, the perfect scenario would be for price to pull back into this area and then continue heading upwards towards what this major key zone that we drew from the monthly time frame. This would be the perfect scenario. So even if I were going to be engaging this market, I'll be doing so conservatively because GBP/USD is still showing that even though buyers are pushing it upwards now, on those weekly time frame, it is still in a downtrend, and there is every tendency that there might be a retracement to take out this most recent lower low, price coming into this place and heading upwards. Now, having established that, we can now also look for what I refer to as a candlestick chart pattern to work with. And all I can see here is a simple pattern, simple bearish chart pattern. Now, what do I mean? This is a simple bearish chart pattern I'm referring to. So the market gave us a lower high, gave us a lower low, and it is currently retracing. Now, how do you deal with this kind of pattern? First, this is the pattern that we have before us. To trade this pattern, we have this as a key zone. Now, price is currently just above this low. Now, normally, price has the liberty to move as far as this lower high. In other words, price has the liberty to give us a double top and then choose to probably start coming back down or take out this level to form what? A higher high. So in this case, we can say that the downward trend is still valid. What we now need to look out for is to look for how price reacts in this area. So in this case, we start looking out for the presence of sellers coming into the market or the strength of buyers to continually push price upwards. So that's what we'll be looking at for this week. But as for the candlestick chart pattern to work with, this is what we currently have. So the next thing to do, having established this also on the weekly time frame, would be to go to the daily time frame. The daily time frame gives us the most recent happening, the trading day for the market. Now, what I'm going to be doing in this analysis is I'm going to go as far down as the 30 minutes time frame, so that even those of us that trade in the lower time frame will be able to benefit from the video, because for those that have been following me, I swing trade most of the time. So now, having this before us, let's go to the daily time frame to see what price is doing. Now, I'll go over the explanation I gave before. Price was heading down quietly to come into the zone as a lot of us were expecting, and then all of a sudden GBP USD threw people off balance by creating a double bottom here. The neckline of the bottom was retested. The neckline of the bottom was retested almost at the middle of nowhere, and then price started heading upwards. So now on the daily time frame, that means what we have before us on the daily time frame is an uptrending market, which aligns with what we had from the monthly time frame. However, like I said, I'll be mindful when engaging in buying this particular market. Now, let me zoom in to show us something. This happens to be the most recent supply zone. And for those that trade order block, a lot of them would be waiting to sell here. Now, remember that I already told us that the perfect scenario would be price being pushed back down into this area and then going upwards. So even if, because I need to trade this week, or you need to trade this week, I would be advising that if you are engaging in buying or trying to follow this trend in GBP USD, you have to do so conservatively. What do I mean? Now, guys had retested this double bottom, giving us higher highs and higher lows. For those that trade in the lower time frame, like I said, like I promised, I'm going to be breaking this down further. But for those of us that swing trade, I would simply be waiting for to see what happens, to see if price is able to take out this supply zone. So what I mean is I'll be waiting to see if the price would take out this level, probably make a retracement, then I can start thinking of engaging the market. But for now, if we are to zoom in to see just this part of the market, then we can go to the H4 time frame. So those of us that trade on the lower time frame probably start your analysis from the H4 time frame. And this is what you will be having before you. So the simple thing I'll be doing here, if I were you, would be to place a trend line here. So if you have your trend line here, you have your higher high, higher low, higher high, higher low, and then you have what? Your higher high, and then this is like a retracement. Like I said, this retracement is simply as a result of the supply zone or the order block that we saw from the daily time frame. So even if you were to say, oh, there's another touch of the trend line and you want to start engaging in buying opportunity that this is presenting, then you have to do so conservatively. Why? Because when you'll be buying into the supply zone. But like I said, because of those of us that trade in these lower time frames, how would you approach this in order to at least make something out of the market? The next thing I'll be adding to this trend line would be a Fibonacci retracement tool, just to add like an additional confluence. Now, from this Fib tool, let me take this upwards. From this Fib tool, we can see that price is currently at a key zone. It's not just making it's not just making another touch of this trend line. If we try to mark out our Fibonacci retracement golden zone, we can see that price is currently there. And to give credence or more confidence to this golden zone, if we pull it to the left, we can see that it aligns with a former resistance zone now turned what? Support zone. So everything is still giving us confidence that GBP USD is going to be heading upwards. You can see that the downward momentum has reduced drastically. Price is at a Fibonacci retracement zone. But the point I'm trying to make is, in as much as this presents a good opportunity to buy, for us to I believe that those of us that trade in those lower time frames will take our trades maybe on the 30 minutes or 15 minutes time frame. So let's go there. So on this time frame, we can see that this is actually a good opportunity to buy. So if we put our counter trend line, it has just been broken. So if you are lucky enough to see this video, you can buy GBP USD. But in doing so, this is what you're going to be having. Like I said, I wouldn't advise holding it for long because there's a strong supply zone above. So, and buy GBP USD if you're able to come across this video early enough, and this would be your stop loss, and this should be your take profit. So you can even extend this a bit further to get like a better risk to reward. Or just to be safe, you can put it here at this 100% mark of the FIB 2. So for those of us that trade on the lower time frame, this is a very viable trade to take. But personally, I don't take trades like this because I swing trade most of the time. But like I said, this is a simple professional way to break down the market. You can do this on basically any chart, mapping out your key zones, getting the directional bias, get a chart pattern, candlestick chart pattern to work with, and then go to the much lower time frames where you can take your trades using either the counter trend line entry mechanism like I just did here, or you can use other entry criteria. So thanks for stopping by my channel. Like I said, if you're lucky enough to come across this and this trade is still playing out, then you can jump in and make some money. So do enjoy the rest of your trading week. Like I said, this is a trading academy. You can always reach out for mentorship, for account management, as you deem fit by using the contact details on our bio. So I have a free Telegram channel where from time to time I drop free trades as well as free lectures or free training sessions from time to time. So if you're interested, you can also use the link in this description video. Do enjoy the rest of your trading with. Cheers.